Nowadays, we are hearing so many cases of concern about depositor security. Means the people who are depositing money in banks, financial institutions, government, insurance companies, mutual funds, debentures, all are concerned about security as well as repayment of the amounts deposited. Especially after so many cases of frauds, especially in cooperative banks, latest PMC bank fraud, where it was noticed that around half of the loans were bogus or fraudulently given. So then there is a concern of when there is a loan becomes default, when the borrower becomes default, then there will be a concern of repayment to depositors. Depositors will be punished for their no fault. Depositor will be in panic for repayment because his money is to be protected. For this, what steps we suggest to protect the depositor security are the following. Some of the steps to be followed to ensure depositor security of repayment as per schedule. Number one is security quality, means loan quality, loan security quality. Many of the loans, where there is a fraudulent cases, many of the loans are given on defective security or under security or diversion of funds. So that will create a lot of problem of repayment. Of course, that may not be known to the depositors. So what we suggest is all the loans given should be properly secured with security of assets, income and repayment. And this will ensure the prompt repayment of depositors. So this is important to taken care of by the banker or the financial institution. Also, regulator, means Reserve Bank of India, has prescribed so many standards to be maintained by financial institutions to overcome the situation of immediate repayment or means panic in depositors for repayment as liquidity. Means every bank which is accepting deposits has to maintain some percentage, maybe around 8 to 10% of their deposits as security with the Reserve Bank of India, and that can be used for repayment of deposits. But when there is a panic, not 10% people will not accept, all depositors wants to repayment. So that will create a lot of problem. So it is better to avoid panic. The reason for panic is loans given on defective securities, under securities or false diversion of funds. So we have to prevent first the diversion of funds, loans sanction against defective security or fraudulent loans. Next, another step required is repayment schedules given to depositors. See, deposits can be accepted anytime, to be repaid at any time. But what we suggest is, when you are giving long-term loans, maybe term loan of 5 years, 6 years, the repayment of deposit is 6 months, then how will you repay that amount? It is the main concern of financial institution. So, you accept deposits for longer period to lend for longer term and accept deposits for shorter period to finance for shorter period loans. Means many of the term loans should be financed by longer period deposits and many of the overdraft facilities, cash credits can be financed by short-term deposits. This discipline has to be maintained by all banks and financial institutions to protect the prompt payment to the depositors as well as to avoid panic or confusion among the depositors. Every banker has to maintain some percent of deposits as emergency requirement. They need to maintain some percent of deposits as their emergency requirement, emergency repayment schedules or emergency commitments to the depositors. So the deposits are fully secured, paid on time as per schedule, and no panic comes to the depositors. And other side is lending, recovery on time, and protection of empowering the entrepreneurs. That's the other side. Just like a railway track, which is depositors one side, the borrower, both should be balanced well to protect the interests of both the depositors as well as the lenders. It is better to have insurance coverage for all the deposits because depositors, we don't know when the depositors will ask for repayment, and also we don't know when the lender will become default. So it is better to have insurance coverage so that the insurance company will take care of the repayment. Insurance company will reimburse the amount to the bank and financial institution. So insurance coverage also helps. Infrastructure bonds, national highway authorities, electrification bonds. People, it's better to go when you are having long-term funds, you go for long-term bonds, and if your needs for short-term requirements, you go for short-term. And you need not go for banks for long-term deposits. Other deposits are very much attractive. Long-term funds, maybe investments in infrastructure funds, rural electrification bonds, investment funds. Many government organizations are issuing bonds, CPSCs are issuing bonds. That will be helpful to the depositor, and that will ensure spreading the risk. Instead of depositing money only in one bank, instead of that you can go for spreading the risk in so many varieties of insurance policies, mutual funds, issued by the government securities, government bonds. All this can reduce your risk. So it is better if you are having a deposit of, suppose you are having idle money of 10 lakhs, you deposit all 2 lakhs in all these 5 sectors, so that if one is risky and other will protect. And if other is I will protect. This can be considered with the depositor. You need not deposit all the deposits on only one head with one bank and with one head. So you can spread to different banks, different investments, different mutual funds, different insurance policies, or different government schemes like that. That will spread, that will distribute your risk. So that is the precaution can be taken over by the depositor while making the deposit. Of course, it is your idle money. You have to protect, depositor has to be protected. At any cost, depositor money has to be repaid on time as per schedule. That is the final goal. But if it is not possible, what to do? That is the important question. How to avoid that situation? First, diversification of investments. Next is how to take the help of, see, we cannot, for every case, when the defaulter has gone away, when the defaulter is defaulted, even if you take him to jail, he will not get the money. Recovery is important. Prevention is better than cure. So for that purpose, bankers and financial institutions to monitor financial movement of every borrower. If it's a big borrower, you see that you yourself monitor their financial movements and regulate their financial irregularities or indiscipline, anything is done, and then you ensure the depositor security. Unless financial institutions involvement is there and precaution is not there, internal management can take any step to destabilize not only their company's economy but also the banker's life as well as depositor's future. So we suggest all the bank and financial institutions, when you are having so much of level of loans, means limit of so and so, maybe 25 crores or 50 crores, you involve your person, you involve your director in all internal management of the day-to-day management of a company borrower where you are given loan, so that they can regulate the funds movement and prevent diversification of funds, defaults, delays or misuse. Anything can be prevented, and those steps are taken. Ultimate goal of every financial institution, banker and financial institution, is to repay the depositor on time as per schedule. That is the final goal of every bank and financial institution. That is to be ensured not only by the banker, regulator, Reserve Bank of India, and as well as the government of India. And also monitor their activities. Banks and financial activities is on the role of the regulators, and financial relations has to be maintained financially, not by morality or relationship, society, charity, like that. It should be financial means financial only. That is the final opinion that can be taken care of by the bankers, financial institutions, regulators, government, as well as depositors and lenders. Thank you.